Welcome back to Yahoo Finance Live. We're a few minutes from the opening bell, and there's some more movers that we were watching this morning. Sozzi and I looking at Under Armour, and that company, sort of a lot of different pieces to this commentary. So first of all, let's take the fourth quarter earnings. As you can see there, beating estimates, just about double what analysts were looking for. Revenue also coming in ahead of estimates. But on the flip side, the company talking a lot about supply chain issues that it said will have material impacts on the spring and summer season and maybe beyond that. So this quarter, Under Armour says revenue is going to grow at a mid-single digit rate compared with a forecast that it made back in November for low single digit growth. So you would think that that would be a little bit better, but at the same time, it looks like it's going to get hit by supply constraints. So when I say it's sort of mixed here or a little bit confusing, the outlook, that's what I'm talking about, Saz.
Yeah, Julie, this quarter from Under Armour gets a bleh rating for me. I mean, really, it wasn't they beat on earnings, but the outlook was about 12 cents below consensus for the first quarter. And if you go down to the bottom of the earnings release, and to your point, look at what they had to say about inventories. Inventories down about $85 million year over year. So you are probably concerned, do they have enough inventory against all of these supply chain bottlenecks to meet just that spring demand? And secondarily, we've also heard from, I think, a lot of retailers, Julie, that January was slow. So there's a lot of expectation, hopefully, that sales bounce back in February and March for retailers.
Yeah, and they're also talking about gross margin being down 200 basis points compared to last year, this current quarter. And so that's sort of similar also to some other companies that we have heard from. So we'll continue to watch this one as we see it trend a little bit lower. On the flip side, we got Zillow. And Zillow also, so it's interesting, Under Armour called this a transition quarter, the current one. Zillow is certainly in a transition as well as it gets rid of some of the inventory it had as part of its iBuy program. The loss shrinking for the company, the loss coming in better than estimated, even as revenue came in better than estimated as well. For the first quarter, Zillow is estimating revenue of up to $3.44 billion. It looks like that is better than estimated as well. The shares are up some 15% this morning. And the company saying that the net impact of those iBuying operations, the wind down of inventory, operating costs, restructuring costs, that all of that will end up being cash flow positive as they go through that transition, Saz.
Well, this earnings call for me, Julie, definitely conjured up some laughing, some LOLs for sure. Let's keep in mind, this is a company that saw its stock price in early last year about $202 at its high, essentially now down in the toilet at under $50 because of their really operational miscues in buying homes now that they continue to sell off those homes. And while I was laughing on the conference call last night, they had the hubris, I should say, co-founder Rich Barton and his team saying, we're going to put out 2025 targets looking for revenue of over $5 billion and $2.25 billion in adjusted operating profits. That is a 4-year compound annual growth rate for sales and profits of 24% and 29% respectively. And to me, they look absolutely absurd. And secondarily, it's hard to believe those type of targets coming from a team that just has destroyed the stock price.
What about the housing super app? Saz? That's what they're
Doesn't do it for me.
now.
Doesn't do it for me.
You're not excited about a housing super app?
Not excited about it. They have a lot to prove.
Well, that's something that the CEO, Rich Barton, touted also, talked about that it would help people schedule tours and sort of take them through different steps of the buying process. We'll see. He's talking about $5 billion in annual revenue and 45% margins on EBITDA by the end of 2025. We'll have to see what happens here. All right, let's take a look at futures here this morning as we get ready for the opening bell. Looks like we've got a mixed picture at the moment. There's the opening bell on this Friday morning, and sort of a muddle, if you will, in terms of stocks here, because investors are trying to figure out what the heck is going on, right? Are there going to be 5 interest rate increases this year? Are there going to be 7? Are there going to be more? Are we going to see a 50 basis point hike at the March meeting? Are we not? What is not just the wind down of the bond buying program, but the wind down of the balance sheet? What does that look like? What's the effect on the economy? And oh, by the way, all of this happens with the lag. That's something to think about as well. The Federal Reserve raising interest rates. It's not like it raises rates and inflation goes down. So by the time all of that makes its way through the economy, what are going to be the underlying effects on inflation, and what will be happening then? Yes, Brian Sozzi?
Wait, so you're telling me that my deodorant might go from $14 to $20 soon? Is that what you're teasing to me?
Oh boy, you and the deodorant. I've never talked about deodorant so much in my entire life.
Just tying that thread throughout all the shows, Julie. Just tying the thread. We do.
It's a thread. It's a bludgeon. I don't know what it is. All right.